Hi, this is Scott Himmelstein with the Scott Himmelstein Group. Welcome back to our video blog. Today we're talking about 3 things you should know if you're financing an investment property. So before we talk about that, if you're a home seller, don't miss out on our free home value report. And if you're a buyer looking to purchase a home, check out our free MLS search to look for properties all over Southern California. So again, today we're talking about a question that we get asked quite often here at the Scott Himmelstein Group, and that is, what do I need for financing or to make myself a better buyer for when it comes to investment properties? Well, number one, have a sizable down payment. You don't necessarily have to come in all cash, but in private mortgage insurance, since it won't cover investment properties, so you need at least 20% down to secure traditional financing for them. But if you can amass 25%, then you might even qualify for an even better interest rate. So jumbo loans, which are typically used for financing more than $417,000, they don't exist really pretty much on investment property. So again, number one, you need between 20 to 25% down on an investment property. Number two, it helps to be a strong borrower, and there's a lot of factors that go into this. Among them, you got loan to value ratio and the other policies of the lender that you're dealing with. They can all affect the terms of the loan of the investment property that you want to buy. Obviously, like any other home loan, that you're going to need to check your credit score before attempting to deal. So typically, when you're buying an investment property, any score below 740, it can really start to cost you additional money for the same interest rate. So below 740, typically you'll have to pay a fee to have the interest rate stay the same, and that can range from 1/4 of a point to 2 points to keep the same rate. And obviously the alternative to paying points if your score is below 740 is you might be forced to pay a higher interest rate. And in that same category, making sure that you're a strong borrower, especially if you already own other investment properties, the bank may want to see reserves on those properties just in case you have vacancies, so it shows that you're not dead in the water. And third and finally, we always typically recommend here at the Scott Himmelstein Group that if you're going to be investing in an investment property and you need financing, best to shy away from the big banks. So if your down payment isn't quite as big as it should be, or if you have other extenuating circumstances, then you're probably going to want to be going to someone who's a mortgage broker or a direct lender that has their own money and on their own special programs. So that way it gives you a lot more flexibility. And mortgage brokers, they have access to a wide range of loan products, and they can obviously find programs for you that would not be available from the big banks. So again, those are 3 things that you can look at when you're looking to invest in an investment property when it comes to financing an investment property. Hope you enjoyed our video blog. As always, if you have any real estate needs, you can contact us direct at 818-396-3311. That's 818-396-3311. And we look forward, as always, to seeing you next time.